Hi everyone, my name's Azadeh Vazi. I'm Head of Corporate Affairs at Intrum. Today we published our Q2 results and I'm here with our CEO Andres Rubio to discuss some of the highlights and what we have to look forward to. Hi Andres.
Hello, thank you for having me.
So let's start with the headline figures. EBIT's up and margins are continuing to improve. How do you interpret this? Can you give us a bit of a summary?
Of course. It is a continuation of a very positive profitability trend that started last year, continued through the end of last year and in the first quarter, and now you see it in our second quarter results. EBIT is one of our strongest quarters, if not our strongest quarter, since before we repositioned the company in 2023. And that EBIT improvement is accelerating, and also more of it is falling to the bottom line, as evidenced by the fact that in the second quarter, our net income was over 300 million SEK, compared to 100 million SEK in the first quarter. So more of that profitability improvement is falling to the bottom line. It is also across the board, as I'll talk about, I think, in a few minutes, much more comprehensive across both our investing business as well as all of our servicing markets. So I think it indicates the strength of our business across all of our markets.
And let's focus for a moment on top-line growth. So we saw that decline this quarter. Can you explain that for us?
Of course. Our top-line growth dropped year on year in the second quarter 9%. Given we operate in multiple jurisdictions, foreign exchange is an important factor. Of the 9%, 4% is explained by that. So on a constant currency basis, we're down about 5%. Of that 5%, roughly half of the decline in top line is from servicing, and roughly half the decline in top line is from investing. Luckily, on both sides, we've improved our EBIT year on year. So we are doing more with less top line. In investing, it's purely down to a smaller investment portfolio. You can almost track exactly the decline in revenue in that business with the decline in assets. But we are improving our EBIT, as you've seen from the results and as I mentioned earlier. In servicing, it's really driven by two large markets, Greece and Spain, that have very large perimeters, where new inflows are not sufficient to offset current collections. Therefore, the perimeter is structurally declining. In all of our other markets, we're basically flat to slightly up. But overall, our revenue, particularly on the servicing line, on the servicing side of the business, is something we want to increasingly focus on to improve going forward.
Can you talk about the margin improvements across all of the servicing markets that we're seeing?
Of course. First off, the adjusted EBIT margin is significantly higher in our servicing business than it was a year ago. 25% this quarter, 17% a year ago. We're already on this quarter at what our target is, so I believe that we're going to, across all our business and almost all of our markets, get to that 25% or above very soon. Second, it is broad-based. So the north of Europe increased 11 percentage points. The middle Europe increased 7 percentage points year on year. Southern Europe improved 6 percentage points. So it is across our entire business. And then when you look at the individual markets, 17 out of 20 markets have improved their margin. What this means is that today, we not only have more EBIT, but we have more EBIT from servicing, and it's more EBIT from more markets. So we have a much more diversified, stronger, and broad-based servicing business, and frankly, stronger servicing business than we've ever had. That's showing up in the numbers.
Great. Well, I'm going to switch to investing now. So we saw a really strong collections performance in investing, but the portfolio investments were lower this quarter. Can you add some color to this?
Yes, I mean, our investing business is going through a transition from a proprietary investment model to a partnership investment model. We still have a very large back book, about 23 billion, give or take. And on that back book, the vast majority of our P&L is driven by collections on that back book. And during the quarter, we did a great job, 106% against active forecast and 112% against original forecast. You mentioned new investments. New investments are a function of our capital partnership, which is still scaling up with Cerberus. We have committed to 2.7 billion of investments since the inception. We have another half a billion roughly that has not closed yet that we've already agreed to. And during the quarter, we didn't invest that much. It was 140 million SEK during the quarter. More timing than anything. This half a billion is closing now as opposed to before June 30th. But ultimately, that business, we have to focus on the quality of those investments. We have invested less than we expected, but invested at a much higher IRR. We're being disciplined in that approach. We're not chasing assets and chasing yield. And we will continue to play the lower IRR, high volume balance in a disciplined fashion to grow that business with our capital partner.
Can we talk specifically about the Cerberus partnership for a moment? It was finalised earlier this year. How is it progressing? How do you feel that it's going?
Yes, that's gotten off to a good start. We have a very good relationship, working relationship with Cerberus. We have agreed to do 17 deals, 2.7 billion SEK invested across 8 markets, so it's impacting across our entire investing platform. We've probably invested a little bit less than we expected because we find the current environment to be challenging and we want to be disciplined on IRR. Thus, we've invested slightly less than we expected thus far, but we have invested at a higher IRR. The important part, the most critical part of it is that on the deals we have completed, we have proven out the model where we invest alongside them. We get our return on our investment, but in addition, we get revenues from investment management, which today are modest, but will continue to grow as we scale up the partnership. And just as importantly, if not more importantly, we get the entire perimeter of the investment, impacting and improving our servicing revenue and EBIT.
Great. Let's switch to technology. Can you tell us about the rollout of technology and specifically Ophelos?
Well, the second quarter was a very active quarter and a very important quarter in the acceleration of our rollout of technology. Specifically, we rolled out Ophelos into 2 markets, Italy and Portugal. We now are in 8 markets. We expect to be in 11 or 12 by the end of the year. Where we've rolled it out, it is showing the exact benefit that we anticipated and that we've seen in other rollouts previously, which is improved collections, lower cost to collect, and the customer gets a better experience. The quarter saw us dramatically increase our migration of cases to Ophelos. In April, we migrated 30,000 cases. In June, we migrated over 200,000, nearly 250,000. We expect that migration pace to accelerate and continue through year end and into next year, which should mean that this individual benefit that we see in specific rollouts on an aggregated basis to really produce a financial benefit to us. The other element that's very exciting about AI that we rolled out during the quarter was voice AI, Olivia, we call it. There, we have developed the product. We are already winning client mandates in some markets, and we're already using it in some markets. It's important to note that, as you've heard me say before, we take 160 roughly million actions a year to collect for clients and for our own benefit. Of those, more than 30 million are outbound phone calls. We believe voice AI can handle the vast majority of those 30 plus million phone calls or phone conversations at a lower cost and as good, if not better, an effectiveness than human agents. As we do that into 26, we will see an additional financial impact from the rollout of technology.
And finally, today is the day that we can talk about the closing of the recapitalization. What does that mean for Intrum?
I think it's an incredible milestone. We have closed the recapitalization. I want to first thank everyone involved, my board, my management team, all the employees, our external stakeholders, our creditors, our equity holders. I think it's an incredible milestone. We've been at it for more than a year. And what we have now is we've turned the page, we've opened a new chapter where we can go forward and we can really develop the business. I think the result of the recapitalization is really a testament to the fact that we have an industry-leading business, we have a cash-generative business, and what's wonderful is to see where we are today as opposed to a year ago, where our creditors and our shareholders are in a much better place, and our business has never been stronger.
So, looking ahead to the second half of the year, what are your main priorities?
For the second half of the year, and into 26 very importantly, we have some very simple objectives. We want to continue to be more efficient. That's automating processes, rolling out technology. We want to focus on operations to improve our efficiency. We want to continue to deliver for our clients. We want to do more of what we do today for our clients in higher volumes. We want to do new things for our clients such that we are growing the economic perimeter of what we do with our clients. And then we want to scale up our investment partnership with Cerberus such that we see not only our own investments improve over recent quarters, but also the economic benefits of the model with the additional profit that comes per unit of investment to manifest itself and to really scale up and to have a real impact on our P&L. Those are the three areas we're focused on going forward.
Great. Well, thank you so much for talking to me today.
Thank you, Azadeh.